Welcome to Woods of Stardon. This is CH. I will be covering the VanEck Defense UCITS ETF that has the Bloomberg ticker DFNS in this video, which is a refreshed version of the video I did last year. This is part of my Absolutely Biased Comments or ABCs series, whereby the aim of this series is to cover one fund per video to share how an individual investor can try to find out more about a fund from public sources and do some basic research or simple due diligence on the fund before deciding to buy the fund or walk away. Some quick disclaimers before we start. This is not a product sales pitch or a recommendation to buy. I'm not sponsored by anyone to do this video. Please do your own research and be clear about the product features and risks before taking any action. One of the viewers left a comment in my previous video covering the fund strat Granny Shorts US Large Cap ETF, asking for a review of the Global X Defense Tech ETF or SHLD. Since I was planning to do a refresh video on DFNS, I thought I would compare the two this round. Therefore, you will find similar comparison data between DFNS and SHLD in this video, as well as the other video focusing on SHLD. Conflicts are inevitable in human history, as our brains are genetically wired to compete for territory, resources, and power that are often achieved by aggressive means. There is no single day in our modern world that is without any geopolitical conflicts. It is therefore a given that all countries need to establish defense capabilities, from the traditional military solutions of bullets and missiles to the newer age cybersecurity and other technology-related solutions. As such, there is actually a wide and profitable range of stocks to consider when it comes to defense investments. As I am preparing this video, the US-Israel vs. Iran war has escalated. I'm sure every observing country is thinking, can I handle precision strikes? Can I fend off swarms of unmanned drone attacks? How do I counter this or retaliate that? All these events reinforce the fact that defense investing is a perpetual investment theme. VanEck is a US-based asset management firm founded in 1955 by John VanEck. VanEck has since the start been a thematic investment player, focusing on identifying new investment themes in the market and taking the lead to launch associated investment products, from gold investing to emerging markets to digital assets. VanEck today manages over $181 billion worth of assets across all types of asset classes, with equities slightly over half of the assets. Equities and commodity solutions have seen significant growth in assets compared to about a year ago when I did the original video on this ETF. VanEck is best known for its ETF business, primarily US listed, but also in the recent years been expanding its Europe UCITS offerings. Besides ETFs, VanEck also provides to a smaller extent other mutual funds and private fund solutions, as well as other investment solutions. The VanEck Defense UCITS ETF or DFNS is a sub-fund under the VanEck UCITS ETFs plc fund family. The fund family is set up as an Irish open-ended investment company with variable capital, commonly termed as OEIC or ICVC, and covers a long list of VanEck ETFs meant to be offered internationally. The ETF is listed on multiple European stock exchanges for trading in various currencies, and DFNS is the Bloomberg ticker for the US dollar listing on the London Stock Exchange. Unlike the US-listed ETFs, VanEck doesn't provide manager information at fund level for the Europe-listed ETFs. There is a general investment team webpage that lists Aaron Rankers as the head of investments, who is the main person responsible for development and management of index replication and optimization strategies for the ETFs. The webpage also lists several other portfolio managers in the team that I will not elaborate as there is no fund-specific information available. The VanEck Defense UCITS ETF or DFNS tracks the market vector Global Defense Industry Index, which is an index from marketvector. Let's understand a bit more about marketvector and this index. Marketvector is in fact an indexing business founded by VanEck in 2011 and was renamed from MV Index Solutions or MVIS in 2022. Marketvector differentiates itself from the big indexing players by focusing on thematic plays and lesser covered markets, and is used as a basis for VanEck's ETF business. The Marketvector Global Defense Industry Index or MVDEF was launched in early 2023, with a base date from 2021 onwards. So this is a relatively new index with less than 10 years of track record. The main focus of the index is pure play, whereby underlying companies must derive at least 50% revenue from military or defense industries. One problem with some of the older indices and ETFs in the market is that they combine traditional aerospace with defense companies, leading to portfolios diluted with commercial plane manufacturers, etc., which is not ideal for investors looking purely for defense-related investments. The index has a size requirement of $1 billion market cap, which gives better stability through the larger companies, but eliminates any opportunities in the smaller cap space. There is currently an increased interest in small cap public and private companies that have interesting defense-related ideas, and with decent likelihood for these companies to be acquired by the larger players. They will unfortunately be missed out if they currently do not qualify for the size requirement. This doesn't mean that it is hard for new entrants to get into the space though. For example, OpenAI recently replaced Anthropic as the key AI vendor for US Department of War. If OpenAI deepens the partnership and eventually derives more than 50% revenue from this, as well as become a public listed company, it will certainly be eligible to be added into the index. The index also has an 8% allocation cap that is done on quarterly rebalancing. This helps to reduce concentration risk, which helps in diversification in the long run. Let's take a quick look at the Global X Defense Tech Index that is tracked by the Global X Defense Tech ETF or SHLD for comparison purposes. This index is launched in mid-2023, with a base date from mid-2022 onwards. So it is also a relatively new index that has a slightly shorter track record than the Marketvector Index. This is also a pure play index, whereby underlying companies must also derive at least 50% revenue from the three sub-themes identified by the index that are cybersecurity, defense technology, and advanced military systems and hardware. The biggest difference here is that the Global X Index has a much lower market cap requirement of only $200 million for a company to be added into the index. This results in a higher number of constituents of 49. There is a similar 8% allocation cap in this index, although the rebalancing is done semi-annually instead of quarterly. Given the differences in the stock selection methodology between the two indices, this leads to slightly different portfolios. Here is a comparison of the country exposures. The Marketvector Index has a slightly more balanced allocation, with lower 48% US exposure and a decently meaningful percentage allocation to the rest. The Global X Index is more distinct on both tail ends, with a higher 59% US exposure and several countries at the bottom with less than 1% each. The top 10 holdings of the two indices are therefore slightly different as well. While there are obviously plenty of overlaps like RTX and Palantir and Hanwha Aerospace, the most notable difference is Lockheed Martin, that is absent in the Marketvector Index, but is the top holding in the Global X Index. Now Lockheed Martin is obviously a key US defense company, but it didn't perform too well in the last few years. So I am not sure when did the Global X Index add it in and how it impacted the performance of the index, but we will see later. As mentioned earlier, the VanEck Defense UCITS ETF or DFNS is a passive index tracking solution that tracks the Marketvector Global Defense Industry Index. Through this, The ETF aims to provide investors with access to current leading defense technology companies, large-scale cybersecurity firms, and defense-relevant service providers. The ETF prospectus provides a bit more details on the investment policy, with further elaboration on the different categories that are relevant to the defense team. As seen, there are more and more technology-related stuff besides the traditional physical weaponry. With fast AI advancements in recent years, this will continue to be a prominent development when considering defense-related investment ideas. The ETF has specific constraints to avoid companies linked to controversial weapons, as with typical mutual funds and ETFs. There is also a max 20% limit on emerging markets, although the portfolio should generally be developed countries focused as seen from the index portfolio. The ETF adopts a full physical replication approach, which means it will invest directly in all the components of the index with similar allocations. This should be normally easy to achieve as the index has only a small number of 36 stocks and they all have trading liquidity. The ETF does have flexibility to adopt a representative sampling approach if needed. There is also a nice paragraph explaining tracking error of passive ETFs in general. The ETF is expected to have less than 0.2% annualized tracking error. The VanEck Defense UCITS ETF or DFNS was incepted in March 2023, 2 months after the index was created. The ETF currently has $8.9 billion worth of assets, of which over $6 billion was from the past 1 year alone, showing the huge amount of investor interest in this area. In comparison, the Global X Defense Tech ETF or SHLD was incepted in late 2023 and has slightly lower AUM of $7.5 billion. The ETF uses a full physical replication approach. That means its portfolio is near identical to the marketvector Global Defense Industry Index that we went through earlier. The portfolio has a negligible amount in cash liquidity, which helps to minimize tracking error. Full holdings information is updated daily and readily available in the ETF webpage. The ETF has 36 holdings that is identical to the index. For Singapore investors, you will find a familiar ST Engineering in the top 10 holdings list. Besides producing the necessary defense solutions for the country, ST Engineering is also a leading global ammunitions and weapons manufacturer, so it does make sense to see it in a defense portfolio. As earlier mentioned, the VanEck Defense UCITS ETF or DFNS is listed on various Europe stock exchanges, tradable in base US dollars and Euro, Sterling, and Swiss franc unhedged. Investors should take note that the same ISIN is used, as there is really only one US dollar base class, but the other identifiers such as Bloomberg tickers are different across the exchange listings. In contrast, the Global X Defense Tech ETF or SHLD is listed in the New York Stock Exchange or NYSE and is available for trading only in US dollars. Global X does have a Europe-listed UCITS version with a slightly different index and portfolio, but I will cover that in the other video. DFNS has a total expense ratio or TER of 0.55%, which is marginally higher than SHLD of 0.50%. This is the normal fee range for thematic ETFs in the market. While not significant, investors should also note that DFNS doesn't provide any distributions. SHLD, on the other hand, as with most US-listed ETFs, provides a semi-annual distribution even though it is an extremely low yield of just 0.39%, since most of these defense companies don't really pay out dividends. It should also be noted that US-listed ETFs' distribution payouts are subject to US withholding tax, where applicable. DFNS doesn't seem to provide trading premium discount history, so I won't be able to talk about that. The VanEck Defense UCITS ETF or DFNS provides a cumulative performance chart in the ETF webpage that compares against the index. However, there are only a few specific time periods that investors can toggle, so it is not that useful. There is also a performance chart available, although the data is also limited because the fund was incepted less than 3 years ago. We can however see that past 2 years have been great for defense investing, with the ETF delivering 44% in 2024 and 69% in 2025. It has also started this year strong, with 17% in just 2 months. That being said, the tracking error of the ETF is slightly higher than the 0.2% expectation indicated in the prospectus, although we will see if this gets better in the long run. While DFNS and SHLD have slightly different portfolios as we went through earlier, their performances are actually near identical, as seen in this Morningstar chart since the inception of SHLD that has a slightly shorter track record. As such, purely on performance basis so far, there is really no difference going for one or the other. I mentioned Lockheed Martin is currently the top stock in SHLD but absent in DFNS. Looking at this chart, we can deduce that SHLD probably added the stock only recently. Otherwise, the poor performance of the stock would have dragged the ETF down. Let's focus on DFNS. The ETF has strongly outperformed the MSCI All Country World since inception, showing that defense investing has been highly profitable in the past 2 years or so. While all markets move in cycles, and it is not reasonable to expect the ETF to deliver over 40% every year, there is a decent likelihood for this team to continue to do decent, as long as the general equity markets have a decent positive trend. Pure play is an important factor in defense investing as mentioned earlier. The older ETFs tend to combine traditional aerospace sector with defense together, leading to a much weaker performance as shown here. There are also some newer ETFs that focuses more on technology stocks instead of industrious leaders in traditional weaponry. These have also underperformed on relative basis, showing the DFNS current approach of having majority exposure in the industrials still makes better sense. With that, let's summarize our findings. VanEck is a US-based asset management firm and a leader in providing thematic investment solutions since 1955, managing over $180 billion of assets currently. The VanEck Defense UCITS ETF or DFNS is a pure play solution investing into the defense team. It is a passive index ETF tracking the marketvector Global Defense Industry Index. The index is in turn created and managed by MarketVectors, a leading index provider focusing on thematic exposures. MarketVectors is owned by VanEck, who uses this ecosystem to create and provide thematic investment solutions. Some investors may think there might be some conflict of interest here, but the solutions are simply passive index trackers, and I think this is a highly efficient way to create new thematic solutions without too many parties involved. The index is pure play that doesn't include commercial aerospace stocks, but instead focuses on both industrials and technology names that generate more than 50% revenue from defense industries. The 1 billion market cap requirement leads to a smaller portfolio but focuses on larger names that tend to be more stable. It also has an 8% position cap rebalanced quarterly to ensure position diversification. This is a Europe-listed UCITS ETF that comes with several European trading currencies besides the base US dollars. The ETF has exhibited a strong performance since inception, partly attributed to its pure play approach and partly due to a market focus in the defense team in the recent years. Track record is a bit short though, so investors should be mindful that all markets move in cycles, and investments into a specific team like this one should be done prudently and within your own risk tolerance. In conclusion, the VanEck Defense UCITS ETF presents itself as a strong performing pure play solution for investors who want to get specific exposure into the defense team. This concludes my absolutely biased comments on the VanEck Defense UCITS ETF that has the Bloomberg ticker DFNS, and I hope it will help in your investment journey. May we all grow wiser and prosper.